So Facebook just came out and reported their Q3 2021 earnings results here. The first real big tech company to report this week. It's going to be a massive week. And the numbers that Facebook reported were actually quite surprising and interesting. Now, full disclosure up front, guys, I am a Facebook stock shareholder. I own the stock since 2018. I don't plan to sell my shares anytime soon, especially after what we're going to go through today. And in fact, I may actually be buying some more shares here in the coming weeks and months because there's some crazy stuff going on that you need to know. I also want to say I secretly hope that this stock, well, not so secretly because I said it in my last video, I wanted this stock to drop down to $280 per share, which is where I would have loaded up heavily on this name. But it doesn't look like that's going to happen. If you look at the charts historically, this served as a very strong bottom for the stock, so I thought maybe we could get back down here, because usually when there's like a lot of negative headlines on the company, it drops down and could test the support, create a very strong bottom and then move higher. But anyways, doesn't look like that's happening anytime soon. So here we are today. The company's reported their numbers, which we'll go through in a second. I have a position and I may build that even larger because I see the risk reward now with Facebook is just so compelling. So guys, as always, take a second, hit the like button. It helps the channel a ton. I appreciate it, and let's jump into the numbers now. So the headlines read that Facebook beat on EPS, but they missed on revenue. Now this miss on revenue, in my opinion, was quite significant. It was over $500 million. However, flip side to this, they grew their revenues net 35% year over year. The other important metric for these companies is, their monthly active users, the users on their platform. And that came in decent, slight miss on MAU, but DAU, daily active users, did beat here versus consensus. And the other metrics also did well. Now, some more slight disappointment came in with their guidance where they actually missed here, expecting 31.5 billion, 34 billion versus consensus of 34.82 billion. So, a pretty significant miss here, especially after missing on revenue this quarter as well. Now this move here with the guidance is them being cautious on uncertainty from the iOS changes and of course other factors as well that, companies have been facing for the last year and a half. But to offset this a bit, they expect expenses to be down a couple $2 billion, so that should help on their bottom line with their profitability. And here we can see a full breakdown of their financials. Overall, the numbers across the board improved, looking strong. You see double-digit increases here, and financially, this is still a very sound company. Facebook really came out and they showed us that they're still a growing business, a profit machine. And even with these whole iOS concerns here with Apple and, tracking all that kind of stuff, coupled with the media just being so pessimistic on this stock here with, September being a very tough month for it, October so far has been a tough month, they're still chugging along just fine on a business fundamental level. Facebook is still the leader here when it comes to advertising, especially if you want to do super targeted advertising. And people know that. If they don't advertise on Facebook, they're missing out on a huge segment of the market. Now, after Snapchat reported their earnings last week, stock plummeted like 25%, something like that. Investors were really concerned that this was going to trickle over to things like Facebook, Twitter, Google, a bunch of other companies, right? And today with Facebook reporting this, they pretty much said, yes, we did face some of the issues that Snapchat did, like ad spending was slightly affected here because of the Apple changes, but we're not seeing anything like supply chain issues or anything materially that's going to make us, not be optimistic on the future of our company. So investors started buying back in. Now the stock is up slightly after hours, and so far what we can conclude is that what we saw from Snapchat was kind of a company specific issue for the most part, and the leader here, Facebook and Google as well, will probably be just fine, will be able to weather the storm with other segments of their business making up for that revenue. So now with this earnings report behind us, probably one of the most important ones in Facebook's history, we can probably say that things are looking good for the company and the stock could be headed back to all-time highs and much, much further. Now, how can I be so optimistic on this? How can I be so, almost 99% sure that we're going to see higher prices in Facebook in the future? Share buybacks. So while they have fundamentals improving, they're making more money, they're just firing on all cylinders here and just doing extremely well, they're buying back a ton of their shares. During the quarter, Facebook repurchased 14.37 billion back in shares, with still nearly $8 billion remaining left to purchase. On top of this, they also felt that the stock was just so cheap that they're going to be buying back an additional $50 billion worth of shares. And in my opinion, this is a power move to let the market know they believe their stock is dirt cheap. They finished the quarter at around $58 billion in cash and cash equivalents. They're buying back $50 billion plus of their shares. And that may seem a little concerning because they're spending all of their money on that. But guys, this company is expected to report over $40 billion in free cash flow next year. So this is going to be a non-issue for them. They're literally just buying back shares, and all that money they're just going to earn again next year. Share buybacks sometimes make sense, sometimes they don't. In Facebook's case, I think they make a lot of sense because this company has so much money, they're reinvesting, they're growing, they're trying new projects, but they still have so much left over. So they're going to just reward shareholders, reduce the share count, increase the value of current shares, and that just helps the company report stronger EPSs in future quarters, and also helps their current shareholders see more value in the existing shares. So guys, on paper, Facebook has it all. It has amazing fundamentals. So value investors look at this company and they're like, this is a screaming buy. Strong metrics improving year over year, strong free cash flow, extremely profitable, super low PE. Everything is just a check, check, check for Facebook, and that's why it appeals to value investors. Now, growth investors who are looking for double-digit growth, well, did you see the numbers that they reported this quarter? Yes, they missed slightly, but they grew revenues by 35% year over year. For a company that's almost $1 trillion, to grow 35% year over year is remarkable, and that's why growth investors are also in love with this stock. So in conclusion, I believe Facebook stock is severely undervalued here. It's been undervalued for a while. It's kind of always been below the other tech giants. You know, it was starting to get ahead here a couple of months ago, but then all of this negative press came out, and there seems to be some agenda to pull the stock as low as possible, and big money probably bought a ton of shares in the last few weeks. But regardless, I am still a proud shareholder of Facebook. I wished we saw $280 per share, but it doesn't look like that's happening. So I may have to add a little bit here at these current prices, because I think that based on their metrics and their growth going forward the next few years, combined with their massive share buyback, this should be easily a $1.5–2 trillion company in a few years, which means the company at worst should be at around $600 per share, probably even higher than that depending on how many shares they buy back. You know, sometimes you look for companies that have massive growth potential that can 10x your money, like Tesla today, which was up 12%, my best performing stock ever. But then sometimes you want companies that give you that potential upside, but also have a ton of stability behind it. And that's always been my position with Facebook. Always good growth. I love the numbers they report. I'm a user of their platforms like Instagram and WhatsApp, so I love the product. And with that balance sheet of just so much cash sitting there, I never have concerns about this company going away, going bankrupt, or anything like that, right? So it's almost like a savings account. It's definitely more volatile than a savings account, but it has remained as one of my top positions for a long time. It's dropped over the last few months as I've added to other positions, but it may be time here to get Facebook back to the top 3 here with this recent sell-off. I know Facebook's a very polarizing stock. Some people love it, some people hate it. I try to put that to the side when I look at my investments. I look at the investment for the numbers, what it is, where it's going, the growth, and Facebook just checks all of those boxes off, which is why I've continued adding into this company over the last few years and will continue adding over many, many more years to come. Don't be surprised, guys, if this company makes new all-time highs in the next few months, hits $1 trillion market cap once again, and is one of the better performing stocks in 2022 and 2023. Anyways, guys, thank you so much for watching. Hope this video was valuable. Let me know if you are a Facebook shareholder in the comments down below. But either way, thanks for watching. Don't forget to invest positively, and I'll see you in the next one.